Good morning, everyone, and thank you for joining us. My name is Jason Cogdell. I am one of two benefits attorneys at ProBenefits. This is part of our 2017 client webinar series. We try to do each year a webinar on 5500s, both as an update and refresher and reminder of this reporting requirement in advance of the annual July 31st deadline for calendar year plan filing. So that's where we are today. As always, this session is being recorded. We'll be happy to share a copy of the presentation with you along with the slides and any other information that may be helpful to you on this topic or others. And as we proceed today with this session, that'll be approximately 30 minutes. Your questions are welcome. You may submit questions through the question box at any time or separately email them to our team. I want to introduce my colleague, Chris McCauley, who is the Director of Compliance for ProBenefits and a valuable member of our team. For those of you that have not worked with Chris, in addition to his support of our team and general work to support the compliance of plans administered by ProBenefits, Chris also manages our ERISA compliance services, both our 5500 preparation service and our RAP SPD service. And Chris really does a good job with this and knows as much about 5500s as anybody. And so Chris is going to take us through a refresher of the annual 5500 requirements briefly, and then look at some individual filing scenarios, and we'll even look at the EFAS2 database from the Department of Labor. Again, your questions are welcome, and without further ado, Chris.
Thanks, Jason. And again, welcome to everyone in attendance. I first want to start just by putting this Form 5500 requirement in context. So on the next slide, you'll see exactly where the 5500 requirement fits into ERISA compliance. And this is a slide that we regularly include in our ERISA presentations, so you've probably seen it before. This is just a slide of the key requirements of ERISA, and you see Form 5500 listed there. And it is one of the simpler requirements, especially compared to something like COBRA compliance or HIPAA compliance. But it is fairly straightforward, the reporting requirements for most plans. So if you're subject to the Form 5500 requirements, it's sort of an easy compliance box to mark off if you go ahead and report as required. But just wanted to provide this slide to show some context of where we are. Just some Form 5500 basics. The first question is obviously what plans must file. All employers with plans subject to ERISA generally must file, or generally are subject to ERISA's requirements. There are only two full exemptions to ERISA for churches and government entities. Those two types of entities are exempt from ERISA requirements in general. But for 5500 filing purposes, there's also a small plan exemption for plans with less than 100 participants, and we're going to talk a little bit more about that specific exemption on the following slide. So that's all I'll say on that right now. In terms of the mechanics and filing deadline, the forms are due to be filed at the end of the 7th month after the plan year ends. And so that's a rolling deadline depending on when your plan ends and begins and renews for the following year. But the majority of plans are aligned on a calendar year basis. So 2016 calendar year plans are due to be filed by the end of July for 2017. There is a 2.5-month extension that is available. It is automatically granted by the government as long as Form 5558 is submitted by mail prior to the original filing deadline. So an extension is available and is generally automatically granted. Back to the small plan exemption for health and welfare plans. The first thing I want to say is that if you're familiar with the retirement plan filings, retirement plans of any size are required to file a 5500. So even if there are 3 people on the retirement plan, that retirement plan is generally required to file a 5500. And if you're not aware of whether you're filing for your retirement plan, you might want to check with your retirement TPA. Oftentimes, retirement TPAs are actually the ones that prepare the forms and submit the forms for retirement plans. But back to health and welfare plans, there is an exemption for small unfunded health and welfare plans or small insured health and welfare plans with less than 100 employee participants on the first day of the plan year. So another way to say that is essentially health and welfare plans are only required to file 5500s if they are funded by a formal trust or if they have 100 or more participants on the first day of the plan year. So that small plan exemption is significant, and it really takes into account a large number of plans that have less than 100 participants and are not funded by a formal trust. So that's a significant exemption, and we're also going to talk about potential changes to that exemption later. But for the most part, you only need to file if you have 100 or more participants on the first day of the plan year for your health and welfare plans.
Chris, a quick interjection here just to confirm that, consistent with what Chris said, we often see scenarios where employers have multiple plans, but for Form 5500 purposes, they don't realize they've gone over 100 for example, the group life plan or the long-term disability plan, even though health or dental or vision may be under 100. But if any ERISA plan sponsored by an employer hits 100 participants on the first day of the plan year, not in the middle of the plan year, but the first day of the plan year, then that triggers the filing requirement. It's not unusual for us to see employers that have to file for 1 plan or 2 of 6 total. So that 100 mark could apply to any ERISA plan.
So what specific benefits are subject to ERISA and potentially the 5500 requirements? Here is a non-exhaustive list of group-sponsored plans that are or may be governed by ERISA. Again, this is a slide you've probably seen often in our other ERISA presentations, so I'm not going to go through it in detail other than to say that the first half of the benefits listed here down to health reimbursement arrangements are almost always ERISA plans governed by ERISA, likely are required to file a 5500 if they have 100 or more participants. The last few benefits, starting with wellness programs, it really depends on plan design, whether the wellness program, the EAP, or some of these other benefits are subject to ERISA and require 5500 filings. So we just wanted to include just this slide so you can see a list of potential benefits that are or may be subject to the 5500 requirements. And with that, we're going to attempt to bring up a sample form 5500 for you to see, and we're going to show you how you can search the DOL's database in order to see if your plan has filed in the past or a plan that you advise has filed in the past. So the URL is www.efast.dol.gov, and if you go to that website, this is the page that will come up. Actually, there's a page prior to this, but what you'll see up in the left-hand corner is Form 5500 filing search, where the pointer is now pointing. So if you click on that button, it'll bring up this page right here that is the search page, and you can see that there's a list of identifiers that you can search by. We typically find that the sponsor name or the EIN, the tax ID, are the best search criteria in order to bring up all the filings for that plan. So you can search by any of these identifiers, but we're going to search one company, Microsoft Corporation, by sponsor name. These filings are public filings, so anyone that has filed, you can search by plan or sponsor name and find their filings. So if it works, this is what you should find. As you can see, there are a number of filings for Microsoft Corporation, starting with plan number 001. Those plan numbers are for the retirement plan for Microsoft. And then eventually you get down to plan number 501, which if we scroll over to the right a little bit, you can see that that is Microsoft Corporation Welfare Plan. And you'll also see the plan years that have been filed. So it looks like 2015 is the last year that has been filed. That makes sense. 2016 isn't yet due. So if we pull up Microsoft's 2015 filing, we can see a sample of what the form looks like. The first 2 pages are the base form 5500, really just company info, contact information, signature. On the second page, about 3/4 of the way down, you'll see lines 8A and 8B, and you'll see a number of codes. Those are just identifying the benefits that Microsoft offers. 4A is medical, and then it goes dental, vision, disability, so on. So that's what those codes are for. They mark the boxes in 9A and 9B for insurance. So for some of their plans, they have insurance. And then they have also marked the general assets of the sponsor box as well. Those are for their self-funded benefits from which they reimburse claims directly out of the general assets of Microsoft. So that's what those identifiers are for. The third page of the base form is just regarding Form M1 compliance for multiple employer welfare arrangements. And then from there on, it moves to the specific schedules for the specific benefits and carriers. So one of their insurance carriers is Prudential, and this is the information that's required to be provided on the Schedule A for the carriers and the specific benefits. So if you look at that final page of the Schedule A regarding Prudential, you can see Prudential offers their long-term disability and life insurance plan. And from there on, you'll probably find a number of additional Schedule A's with different carriers offering different benefits, but this is really a pretty standard filing. Even though Microsoft is a massive corporation, this is a pretty standard filing, in fact, for 5500 filing purposes. So that's just the method for searching for 5500s, and then a sample form. And again, all the filings are public, so if you want to know if you've filed in the past or your plan that you advise is filed in the past, go ahead and take a look at that. With that, we can skip through those couple slides, which were just the search pages. And I want to talk about next exactly how you go about filing, or the filing strategy if you have multiple plans. As Jason mentioned, the 5500 requirement could apply to them separately, and that's the default. So if you have a company that sponsors 6 ERISA plans, let's say health, dental, life, short-term disability, long-term disability, and health FSA, and all those plans have a June 1st plan renewal, and they all have 100 plus participants on June 1st. So all 6 of those plans are required to be included in the 5500 filing. Health and dental are with separate carriers. Life and disability plans are together with a single carrier. So how would you go about filing these plans if you were subject to the 5500 requirements? Well, the default is that each plan or each benefit or each carrier contract files its own 5500. So what that means is there is one 5500 for each ERISA plan. In this case, the benefits are looked at separately unless they're with the same carrier. So Plan 501 would be the group medical plan. Plan 502 would be the group dental plan. Plan 503 would file as life and disability, and again, the reason those 3 can be included is because they are with a single carrier under a single carrier contract. And then finally, Plan 504 would be the flexible benefit plan, the FSA, and there's just a note here that no schedule is required for the FSA filing. since it would reimburse claims out of general assets. But again, this is just the default of how you would go about filing separate benefits that are all subject to the 5500 requirements. The default is that each benefit or each carrier is its own ERISA plan. Each ERISA plan is subject to the 5500 requirement on its own. So each of these plans would have a base form 5500 followed by a schedule if required. That's the default scenario. On the next slide, what we're going to look at is an alternative option. Some of you may be familiar with consolidated wrap SPD, wrap summary plan description. So one option is to combine all of your benefits into a single ERISA plan that only requires one Form 5500 requirement. And you would go about doing that by adopting a consolidated wrap SPD, which is required to consolidate all of your plans. If you're going to wrap all your plans into a single plan, it needs to be done in writing. So the consolidated wrap SPD is the mechanism for doing that. So what you would do is you would adopt a consolidated wrap SPD with a single plan number, typically 501, but it depends on the employer and the benefits numbers that have been used in the past. So Plan 501, a single wrap SPD document that formally merges all benefits into a single ERISA document for all of your benefit plans. In that case, only a single 5500 filing would be due. Since this plan year was 6/1 in our example, the filing would be due at the end of December for each year, and it could all be included in Plan 501 Company, Inc. Health and Welfare Benefits Plan. So one base form 5500, each included benefit would still require its own Schedule A if necessary, but there would only be one base 5500 form. So this is an alternative option to the default, which is separate benefits or separate plans. The alternative is to consolidate them and wrap them into a single plan for administration purposes.
Chris, can you speak to how often you're seeing the wrap approach from large employers now versus the default? How many employers are filing plans individually versus as single filing wrap plans?
Sure. I think in the past it's been fairly evenly split in terms of consolidated filing versus separate filings. I think as more employers become conscious about SPD requirements in general and are implementing wrap SPDs for their single benefit plans to ensure that each benefit is complying with the SPD requirement, employers are now sort of just going all the way and consolidating all of the benefits into a single plan. And that's happening more and more to the point where a majority of large plans now probably have a consolidated wrap SPD and are filing a single 5500. And it helps for administration purposes. Obviously, a Schedule A is still required for all of the benefits that are required to be filed, but for the base 5500 form, only one form needs to be required, and I think it is just easing things from an administrative standpoint for these large employers to just go ahead and consolidate all of the plans. So certainly I think that is the majority of the way employers are going these days.
Yes, and can you say a word about different plan years for employers that may have a health plan on a calendar year basis, for example, but dental vision plans on a separate plan year basis or other supplemental plans?
Sure. So if we go back to the default scenario where each benefit is its own ERISA plan, then each benefit's deadline would be looked at individually. So if the health plan was a calendar year plan, then the health plan filing would be due at the end of July. If that employer also had a dental plan that renewed June 1, then that dental plan would not be due until the end of December 31st. Now, if you move to the consolidated plan scenario, the consolidated plan, you adopt one ERISA plan number and one ERISA plan year. So there would only be one deadline for the 5500 filing. It is still possible for each benefit to have a different renewal date within that wrap plan, but there would only be one ERISA plan year for purposes of 5500 filing and the filing deadline.
Yeah, well said. And I think that the point is important for employers to know that as the employer, you control the ERISA information. You know, you get to choose how your plans are structured as individual plans or as a wrap plan. You get to pick the plan name, the plan number. We get a lot of questions from employers, you know, how do I find out my ERISA plan number? You get to control your ERISA plan number. You get to control how you file, when you file. You, the employer, are the ERISA plan sponsor, and you are the you know, the master of the ERISA domain there. So there are a lot of options here, but I think it's important for employers to understand those points that Chris made, that the employer drives the compliance here. The employer is not subject to the carrier. The employer is not subject to some outside entity. The employer gets to choose how the plans are designed, whether or not it's a consolidated plan, what the plan number is, what the plan name is, and there's a lot of authority and control there for the employer.
I just wanted to talk briefly about some common compliance considerations, especially some issues and mistakes that we typically see. I think by far the biggest compliance issue is a failure to file a 5500 when it is required. One of the ways that it happened, Jason already described, is if most of the benefits are under 100, but the life plan at some point has increased to over 100 participants not filing for that life plan. And this can happen quite often because an employer is not aware of the requirement or believes they are under 100 participants and have been under 100 participants for 100 years, so they know the small exemption applies and they've kind of put the 5500 requirement out of their mind, but they don't continue to follow that requirement as the company grows, and at some point they jump over 100 participants and miss the first year or a couple of years that they were required to file. So that's by far the biggest issue or mistake. Some plans file late without filing an extension, and then also filing a single 5500 without a consolidated wrap SPD in place is another common mistake. So if you're going to file a single 5500, you want to make sure that filing structure is documented in your plan documents in your consolidated wrap SPD. The reason this is important is because there are significant consequences for non-compliance. Any 5500 not filed by the deadline is subject to a penalty of up to over $2,000 per day of non-compliance. That penalty has essentially doubled here in the last couple of years. That's the statutory penalty. That max penalty is typically not assessed if ever scrutinized by the DOL, but still, whatever penalty is assessed would be significant if that ever did happen. So in order to avoid that, if you have filed or if you have failed to file in the past, then you can remedy those delinquent filers through the DOL's delinquent filer voluntary compliance program, which has reduced penalties, and we're going to talk about that in more detail in the upcoming slides. Before we get to that, I just want to talk very briefly about the summary annual report, the SAR. All it is a summary of the 5500 filing that needs to be distributed to plan participants. So that filing is due within 9 months after the end of the plan year. So again, it's just a summary of the 5500 filing that needs to be distributed to plan participants so they are aware of the filing, aware of the information that is included in that filing. Back to the delinquent filer voluntary compliance program. Again, this is for plans that have failed to file in the past when they were required to do so. Essentially what the program is an opportunity for the employer to raise their hand, tell the DOL they have not filed even though they should have been. Go ahead and make those delinquent filings and pay a penalty which is significantly reduced from the maximum statutory penalties. And those penalties are set in advance. If you file through the delinquent filer programs, those penalties are capped at $10 per day of noncompliance, and that $10 that is running day by day can be capped again at $2,000 per plan year or $4,000 max per plan if there's a benefit plan. If one of your benefits is delinquent for more than a year or two, that plan, no matter how far delinquent it is, that penalty for that plan would be capped at $4,000. So this is certainly an effective and attractive solution for employers that have not filed in the past, are aware and understand the potential max penalties that can come if ever scrutinized by the DOL. And essentially the process is not too dissimilar from the regular standard filing process. You go ahead, file the Form 5500 through the DOL's EFAS system, and then eventually submit payment penalty online or mailed by check. So we help a number of employers that have gone through the delinquent filer voluntary compliance program. Again, it's very attractive for employers that have not filed in the past when they should have. I wanted to talk briefly about some proposed changes that you may have heard about. The DOL proposed and IRS jointly proposed some changes last July that would not take effect until 2019 plan year filings. By far the biggest proposed change is the elimination of the small plan exemption for health and welfare plans, and this is huge because such a large number of employers rely on that small plan exemption to avoid the 5500 requirements, and so this would essentially eliminate that exemption, and all plans, just like retirement plans, all health and welfare plans would be required to report by filing the Form 5500 requirement. So that's by far the biggest, most significant change proposed by the DOL and IRS. Also, there are some additional reporting requirements, including a new Schedule J for group health plans, which would essentially require some increased information, increased reporting requirements that would help the government monitor and monitor compliance with player pay, the employer mandates. So new Schedule J for group health plans, and also some other specific changes to retirement plan filings and specific schedules that would just require some new or additional information. And so the question obviously is, what is the status of these changes? The comment period has closed, but as many of you know, since the changes were proposed, there's been a change of administration. Obviously, with the new president and his administration, there is some uncertainty, or it's unclear how regulations, whether currently intact or proposed, will be how they will be administered. So if I'm making an educated guess at this point, I'd say it's not likely that the proposed changes would actually go into effect, but again, there is a high degree of uncertainty, and so it's just not clear. So this is something to keep our eyes on as we move towards the next couple of years. Again, those changes would not go into effect until plan years in 2019, and those filings for those 2019 filings wouldn't actually happen until 2020. So we're still a couple years away, but we want to keep our eyes on those potential changes. Finally, I just want to talk about our 5500 preparation service and sort of the process. We think it's an excellent service, very efficient for employers, and we start by essentially gathering data from either the employer or the advisor. Certainly can fill out the information as well. We gather that data along with the schedules that are required from the carriers or the administrator. We do a full ERISA analysis on each new filing. So normally that information comes directly to me. I look at it to make sure we're filing with the right plan structure, the right number of plans, including the right plan details, and whether there's other considerations regarding wrap plans, the number of plan filings, that type of information. Once I review, it's a simple process on the employer's end. Once we collect all the data and I review, I pass it over to Kelly, who handles all of the actual preparation in our office, and Kelly does an excellent job of working through our software that we have that integrates with the DOL's database. So he goes ahead and prepares the forms, and we send it off to the employer with a login information. All the employer simply has to do is log in, review the 5,500 forms, make sure it's accurate, and then go ahead and submit it to the DOL. And we provide all the instructions for doing that when we provide the forms. We also provide the required summary annual report, and we provide ongoing compliance support as well. And the following, after we prepare a form once, the following year we follow up 2 to 3 months in advance, request the information again to go ahead and file it for the following year. It's economical. The standard fee is $150 per schedule. It can vary depending on the number of schedules, but the average filing is generally around $450. Again, this is just a little bit more of the process. I mentioned most of this on the previous slide, but once it is submitted or in the process of being submitted, we at ProBenefits, we monitor the DOL's website to ensure that it is eventually accepted by the Department of Labor. So that is pretty much the process of our 5,500 filing service.
Thanks, Chris. Appreciate it. For those of you on the session now, if you have submitted a question that we have not gotten to, we'll get to that in the next few minutes, or you're welcome to send that to Chris by email. In the interest of time, we're going to wrap it up now. Thanks again for joining us and for your time, and we look forward to working with you this year. Have a great afternoon.